Yeah. Good morning, good afternoon, good evening, all over the world, wherever you are, from wherever part of the world you are joining us. Thank you so much for your time, for your patience, for your enthusiasm to join our Tariff Beyond the Trade Beyond the Tariff event organized by HBBA Global. And our moderator and chair will be Nicholas, who will take over the floor very soon. But let me say something about HBBA Global in a couple of words before you will start, or we will start, this very, very, very passionate discussion about the tariffs and the trade. HBBA Global runs a trilateral, at the moment, trilateral ecosystem that includes the United Kingdom, Canada, and Hungary. We are on to spread our wings globally. Another 3 countries are on the list. It's a powerful conduit for businesses seeking growth and expansion across these dynamic markets, encouraging investment opportunities and ensuring our clients' and members' business thrive globally. HBBA Global Strategic Gateway to International Growth, thanks for our members, our guests, and our very professional advisors. As a London-based hub with far-reaching influence, HBBA Global is becoming a pivotal gateway to British, Canadian, Hungarian, and international market. I would like to welcome very warmly the Hungarian HBBA Hungary CEO Zoltán Balog, and also the HBBA Canada CEO Nicholas Jeffrey. Our targeted services are designed to simplify the complexities of international business setup and expansion. Whether you are seeking to launch in a new territory, navigate legal frameworks, or secure funding, we provide the tools, insights, and expert support to make it happen. Understanding regulatory environments is critical, but our expert, Karen Holden, will help you because HBBA Global helps businesses obtain the necessary permits, licenses, and legal documentation to begin operations seamlessly in new regions. Beyond compliance, we provide invaluable insight into the commercial landscape of each target market. Our advisors guides clients through options such as Innovate UK grants, the European Horizon Grants Program, R&D, tax credits, and professional pathway to debt financing, venture capital, angel investment, and crowdfunding networks. However, if you like what you are going to listen to, not just because of the ridiculous circumstance, but because of the meaningful and very professional remarks and debate, I'm very happy to reach me out to get more information about what HBBA Global membership means. And now I'm kindly asking you, Nicholas, to take the floor and start the fire talk because we are very exciting what's going to happen the next and what we are going to listen and learn the next 1 hour. Thank you for your attention, all of you who are participating. Nicholas, the stage is yours.
Good afternoon, good morning, good evening to wherever you are in the world. My name's Nicholas Jeffrey. As Susanna kindly said, I am the Chief Executive and Founding Partner of Impresario, and I'm also the Chief Executive of HBBA, the Canadian group. And we've got quite a large contingent on the call from Canada today, which will be a passionate discussion about tariffs and the relationship with their near close neighbours. How I'd like to engage with you on this call of little over an hour. We've invited several masters of the art of commercial migration, and we've created a series of fireside chats, one-on-one, that we'll welcome you to participate in. And I'm going to ask a few searching questions, provocative questions, to get each guest to tease out some real actionable insights to help us find some competitive and sustainable advantage and avoid some of the bear traps that the US administration are trying to set for us all. I'll open it up to a few questions after each session. There could be a bit more and there could be a few more at the end, but we'll have a time to circle back round and cover off many questions you can. Everybody will go on mute, but do raise your electronic hand if you have a question and it will pop up and I will see it really, really easily. Either myself or Sean or Susanna will actually pick up that question, but just raise your electronic hand if you want to. And also, what I'd like to suggest is you post your details into the chat. If you can open up the chat so everybody can post their details in, it's a really good way to interact with people. Obviously, LinkedIn is probably the platform of choice that we should all be using. But if you put your details in there, your name, your company, your location, and also what you're after trying to find out about or where you're trying to interact, that's really quite useful so that people can see that I'm trying to get hold of Mary and I want to talk to Mary about funding in Brazil. And it's really useful just to put that one line in. So let's move on to this is session two. We cut our teeth on session one, had a great recording. This is going to be called the silent reordering, trade, power, and the new corridors of influence. So again, good morning, good afternoon, good evening to all the colleagues and partners from around the world. What I'd like you to do is step back with me away from the stock ticker tape pricing and the X scroll or Twitter scroll, depending how ancient you are, and to step back from all the turbulence and look more deeply at what is quietly unfolding across the global trade landscape. We're not merely experiencing a trade dispute, we're witnessing a fundamental redrawing of the economic map. And it doesn't matter whether you're a small office, home office trying to grow or a medium-sized enterprise trying to grow. I promise you it will affect you. And we'll give you some really interesting anecdotes of how it even affects a small enterprise like Empresario. But it's moving so quickly that a month gap between our fireside chat just doesn't seem to do the momentum justice. Because at least you could say in the first 100 days, Donald Trump has achieved more, comma, disruption in his first 100 days than any other president known to the US. And we've also had a general election in Canada, and there's been some very interesting backstories appearing there, and we wanted to share these with you. And Canada being a focus of one of our countries is fairly important. So to make it easy to understand what's happening, and more importantly, what we can do about it for our four invited guests, they're going to join me on these virtual fireside chats, and we'll unravel what's going on and work out how individually we can make lemonade when the world is giving us lemons. So I see where we are now as part of a five-part play unfolding in front of our very eyes. And the first act is what I'm calling the strategic withdrawal. On our first call on the first Tuesday of April, we examined the rationale behind the tariffs, which at first glance appeared to be electoral theatre. But on closer inspection, they reflected something deeper. It was a recognition of the internal fiscal fragility of the US and the administration's desire to slow or reverse economic overdependence on global linkages, and ultimately to force the Fed, the Federal Reserve, into an interest rate cut. Because if you get an interest rate cut in the US, all sorts of benefits happen. Exports become cheaper, mortgages become cheaper. The leader of the Fed is fighting Trump because he doesn't want to reduce them so quickly because he's nervous about what is the ultimate impact of the tariff. So you've got this yin and yang, left brain, right brain, whatever you want to talk it, between the Fed and the administration in terms of exactly the progress in the US. But now one question looms larger than all others. In my opinion, that's what's the long-term consequence of a sustained economic disengagement between the United States and China, and what will happen to Christmas? But more to come on that on later. So let's link back to the first chat. My hypothesis, and it's not well versed, which is either means I'm completely wrong or I'm smart, I'm not really quite sure. But my hypothesis was, why is the US administration forced to do this? Remember, it's all about the financing of the $9 trillion in maturing treasury bonds. Now, if China and now Canada quietly begins to sell off its holdings of US Treasury bonds as a response to the ongoing tariff pressures, it could ultimately trigger a ripple effect across the American economy. And as one of the largest foreign holders of US debt, China's divestment would likely drive down the bond prices, push up the yields, making it almost impossible for the US to refinance its debt in a year 2026. So if you remember, the 9 trillion was taken out 10 years ago at just over 1% interest rates. The long-term treasury bonds are now trading at 4.6%. So if you have to borrow the same 9 trillion again, it's going to cost you a lot more money. So if he can drive down the overheads of the US, a la Elon Musk, quickly, he's got to do it in a year and get rid of all the debt out of the way and reduce the debt and increase the interest rate or reduce the interest rates from the Fed, he can then make the US in better shape than it is today. But he's only got a year to do it. So if the Chinese and now the Canadians start to sell off some of their treasury bonds, it complicates the effort to manage the already ballooning national debt that could force the Federal Reserve to actually intervene more aggressively and push the interest rates higher, which will dampen the investment faster, slower the housing market faster, and place greater pressures on the consumer. So this could all be ending up in a geopolitical standoff and turning domestic economic headwinds against the US. So I believe the answer lies not in the visible noise of policy announcements, banging of table and things like that, but the subtler movements of capital, supply chains, and what I like to call statecraft. Kissinger used to call it statecraft. So the once dominant logic of global integration, the global economy, is no longer sacrosanct. And ideological divides and demographic shifts and even national interest are reasserting themselves, not always with fire and fury, but with steady, calculated resolve. Carney bought government bonds 2 days after tariffs. 2 days. So he was buying a mechanism downstream that he knew what he would be able to use. So, as Rob so beautifully put it just before we started our call, one day Canada was being quoted as being the next state of the US, and they had no idea and authority over themselves. One call later, when I'm sure Carney let the US government know that he was controlling almost 7% of the US debt, all of a sudden he was actually quoted as being quite a sensible and quite a nice man. So I think this statesmanship is going to affect what's going on, but hold on to your seats because this is going to change dramatically. because this is not decoupling in a dramatic sense, but it's what I'm calling selective disengagement, and it's being strategically applied. And even a small company or as a mid-cap company needs to keep an eye on what's going on. So yesterday, the US moved ahead with 104% Chinese tariffs, effectively yesterday midday. That's pretty much disastrous worst case scenario for markets in the near term. The S&P Standard and Poor's exchange of 500 companies lost 5.83 trillion in market value. Its steepest drop, 4-day losses since the index was created in the 1950s. Okay, so where we are now is that even if earnings in the first quarter, because they're beginning to come out now, aren't badly down, we're going to see a lot of language from companies about expected impact from the tariffs that will impact the US and us globally. So going on to Act Two, I believe that we should be looking for new corridors, old lessons. When we started this project about a month ago, we talked to somebody in the lumber industry in Canada who was almost in meltdown because he now didn't have his market without the tariffs to go to the US. And we talked about moving lumber sales to Europe. And he said, absolutely no way. There's no point doing that because the UK has excess lumber and it then sells it to the US. And I'm going, no, no, the UK doesn't have export lumber. It's a massive importer of lumber. And this individual running quite a large corporation had just not done his homework and he had got comfortable, stroke lazy, servicing the US. The US market dried up overnight because of costs, and he hadn't really thought and prepared to look everywhere else. So I'm saying in history, as market vacuums disappear or markets disappear, vacuums get created, but they don't remain unfilled for very long. So when you have the withdrawal of one actor, invariably it creates space for others to step forward. Look at Africa since US aid has uncoupled. China's moved in a more dramatic sense, and now the UAE and the Gulf states have moved in as well. You look at the new economic drawing of Africa, and it's red, and it's the Gulf states. So in this new emerging world, we see what I would call the rise of corridors of convergence. They're more than logistic routes, they're more than statements of intent, and they're being signed now. So the corridors that I would suggest that we all need to start looking at are there's four of them. One is the India, Middle East, Europe Economic Corridor. Luckily, it's got an acronym which is called IMEC, IMEC. And it's a logistical artery designed not merely to enhance trade efficiency, but to reorient geopolitical connectivity away from traditional choke points. And a lot of people are looking at that. There's another one called the China Africa Zero Tariff Initiative. So when the US dropped tariffs on Africa, China released them. So there are now 33 African nations that now enjoy full access to the Chinese market with zero tariff. It's not aid, it's architecture. The resurgence of Mexico as a manufacturing alternative with its proximity to the US and new strategic relevance is shaping the hemisphere trade partners. So even though Mexico has big tariffs from the US, it's still close and it's got better tariffs than China. So getting goods from China to Mexico and then Mexico into the US, as Rob will explain to us in a little while, might be interesting. The last one is this Central Asian Middle Corridor. It's an ancient route, and I've done quite a bit of business there. It's an ancient route reimagined for a post-Russian world, and it threads between China, Kazakhstan, the Caucasus, and into Europe. It's the old Silk Route with Tashkent in the middle of it and Samarkand in the middle of it. So each of these new corridors reflect a recalibration of a new worldview. They're not formatted in isolation, but it's the connected tissue of a new, what I would call a multipolar order, in which alignment is defined by resilience, not allegiance, and it requires us to be more agile. The third act is this calculus of contingency. In these times, strategic ambiguity can be a national asset. You can go from 0% tariffs to 50% tariffs to 146% tariffs, back down to 10 and back up to 110. And you can do that in the space of a month. But for business leaders like us, ambiguity without preparedness becomes perilous because we don't know if we can import, because by the time it hits where we want it to be, the tariffs could be 10 times more than we imagined. So what I want to do is actually help us understand exactly how we can work within these tariff tensions. So let's not forget, this is Act 4. So let's not forget that trade is not merely the exchange of goods. It's an expression of values of influence and power. So when the United States and China reduce engagement, we must recognize that the result is not simply a gap. It's a rebalancing act, almost like sending ripples across waters when you throw in a rock in the middle. This opens the field for nations previously sidelined to become more agile, more informed, and more connected. So I know we have a lot of people on from Hungary, so this is not a political statement, and I'm living here and a resident here, but look at Prime Minister Orban. His maneuvering with China and with Trump and with Russia and with Europe might be a dire repeat of Hungarian geopolitical maneuvering throughout history, or it might be really, 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 really smart. Only time is going to tell, but that's what I'm saying. If you're in Hungary looking to export, you're sort of looking at it at the moment going, hold on, should I go east off to China because that looks really, really good? Or should I go off to the US? Oh, hold on, I can't really do that because Hungary's got the same tariffs because it is part of Europe. You've got to understand these ripples and understand what's going on and speak to as many people and groups like this to understand what your next step is. So in this mild chaos and complexity, there is advantage. And the most successful enterprise will be those that interpret change before it's obvious. Engage with diplomacy as much as distribution, and recognize that in this moment of commercial decisions, they're also geopolitical acts. Now, we'll circle back round to talk about exactly what can you do now in terms of trading beyond tariffs. And we've got some ideas for the UK and for Canada and for Hungary. But what I wanted to do is I wanted to move towards our fireside chats because what I've just explained is almost like a 40,000 foot view, and that's not what we need. Although it's interesting and though it's a provocative conversation, we need to talk at ground level to understand what is the impact so that your trade strategy can no longer be in your 5-year plan. It has to live in your next board meeting. It has to live in your next hire, and it definitely has to live in your next shipment. So what we've done is we've collected a group of 4 individuals for our fireside chats. And I'm delighted to invite some really well-connected people. Some I haven't known for very long, some I've known for a long, long time. And these are subject matter experts in their field to sit with me and have a fireside chat, but we want you to participate in it. So we'll pause for questions at the end of each chat. So you can put up your little electronic handshake if you have a question and we'll pick that up. And then I'll go on to the next. And if you want to hold your questions until after the event, link in and link in to everybody that you need to. If you want to hold them to the end, we'll come back round and we can pick them up again. So please allow me to introduce my first fireside guest. And if Karen, if you could be unmuted. So Karen Holden is from the United Kingdom. She's the founder of a really well-branded company called A City Law Firm. So it does exactly what it says on the tin. Karen leads a recognized award-winning legal practice that actually supports entrepreneurs and SMEs, and obviously big, mid-sized established businesses. But she does it in navigating complex legal challenges. She's been awarded the Freedom of the City of London, champion for women, and she's a firm rank in the chambers and the partners. And her experience spans corporate law, large scale investment, business scale, and everything else. She's got a good understanding of AI, blockchain, and the web. So, Karen, welcome. Delighted to see you again. Thank you very much for joining us. Look, my first question is actually outside the geographies that we're focused on. So it's not about Canada, it's not about Hungary, it's not even about the UK. You recently ran a successful trade mission to the UAE to Dubai. So what's the mindset of British companies to export and to trade outside the UK at the moment? And do you see a real bow wave of interest in us looking east as UK companies rather than to west and specific to the US? What are some of the trade highlights? What are some of the highlights of that trade mission?
Well, firstly, hi everybody, and thank you, Nicholas, for the introduction. Sorry, I was trying to take as many notes as possible as well for that. Yeah, I mean, my role originally was to help people from overseas setting up in the UK and running UK businesses, and there has sadly been a shift. So I'm now trying to help companies go to jurisdictions where it's safe. But I think from the UK's perspective, we are also looking for secure jurisdictions where there's a framework, a legal framework, where there's regulations, where your intellectual property is safe. So I think especially innovative companies want to go somewhere it's safe, secure for their currency, for their innovation, for their IP. Dubai is becoming very clear and strong on their positioning in that you can hold your intellectual property either with us under a common law UK provision, or you can keep it here in the UK. They're developing rules and regulations based on our framework. We even have an arbitration and mediation court there. You can practice law there. So I think from a UK perspective, going then there, you have to go with your eyes open. There are still nuances over there, but it's changing rapidly and it's proven. So I'm slightly anxious about Abu Dhabi, which is family orientated, and Saudi Arabia because it's not tested. There's a lot of opportunities there and there's a lot of money and wealth there. And they're actively asking companies to pitch to investment, to export there, to develop their products there. But for me, Dubai was secure. It's a very different jurisdiction. They are open and welcome to other businesses tendering. And unlike the UK, I can't speak for the jurisdictions, the government asks you to tender. So if they've got a problem, which they've identified, which is quite rare in the UK, they ask people to tender. They then accelerate those businesses and help them with funding, whether it's grants or investments. Then basically the winner of that tender has a contract. So they're actually taking small scale ups through to investment, through to innovation. And the government's rapidly begging people to come there and offer them this innovation. So I think there's a different appetite over there. They're seeing the government running as a business as opposed to a government aid. And what I do love about that, they're open to every jurisdiction, but they're loving the UK for our innovation, for our education, for our stability and understanding. But I met a lot of American founders there, African founders, and it was a lovely melting pot of all different people from all over the world, culturally coming together and working together, talking together, networking together. But you didn't feel like a startup business in a foreign jurisdiction. They were collaborating with you. So if you're smaller, the larger institutes want to nurture you and mentor you. If you almost feel like on an equal footing. And I think sometimes the larger businesses and the small businesses struggle to collaborate, whereas in Dubai, it was very much open door. So I'm not saying it's perfect in the UK. I'm not saying it's perfect in Dubai, like anywhere, but I think the reason people are going towards the Middle East is because there's a solid framework and an understanding.
And it's really interesting because you look at global money, and all the families, no, not all, lots of the families are moving their capital and their domicile to Abu Dhabi. So even just a month ago, one of the head of the OTP bank here in Hungary moved all the family money, not OTP money, but the family money to Abu Dhabi, and has set up home for himself. He's just resigned as the chairman of the bank here, OTP, and his son's taken over. But I think there's a lot of money, and you kept using this word, what you just said, the security, which is it feels more balanced. It feels less chaotic than lots of different parts of the world at the moment. It seems more balanced.
They're using the UK for regulatory framework, which gives me some comfort. So,
Yeah.
you used to have a director and a 51% shareholder who is Emirati working within your business. And now you don't have to. You can literally have a license and a company, whether you're on the mainland or free zone, to actually prosper. But
So what's the UK's appeal now? Because if we were just listening to the conversation, we'd all be packing up shop and flying to Abu Dhabi. But from your perspective, why is the UK still such an attractive partner for countries outside of the US and the EU? What's the real value of people still coming to the UK?
So I would never want to offend any other country. So I'm just talking why I love the UK. But I do think we're globally trusted. People moan about the regulations here and compliance here and the law here. But I think that's its selling feature, because we have a common law system which actually underpins a lot of other countries. So if you look at international contracts, they're actually brought over into our jurisdiction because we are trusted. Our court system is not perfect, but you know where you're going, you know what it costs, you know that it's ultimately going to be an outcome, or as opposed to 10 years down the line, it's not been heard or somebody's bought somebody out. So we do hold ourselves to high standards. If you register intellectual property here, it's safe. If you go through the court system, it's safe. So I do think we still harbour a really good environment. But I also think UK businesses are really open to collaboration. We're innovative. Our education system is still one of the reasons family offices haven't all led, because they want the education here. And I think we've got this innovation, we've got education, and we've got integrity, and we're not perfect, but we have been around for a very long time.
And what do you see as some of the sectors or industries where you still see the UK as really having competitive edge globally? And let's put AI to one side, because it's a bit like the statement, I love you, everybody says it. But putting that to one side, what competitive sectors or industries do you think the UK have real competitive advantage still?
So where I'm seeing a lot of the investment coming in, and where I saw Dubai almost begging us to take founders out there, was the green technology. A lot of companies say they're sustainable, they're not, they can't flow through the whole processes. That's something like carbon training frameworks and sustainability that's still very key here. We are really leading still, in my opinion, in health and life sciences. We've still got so many research institutes. We've got a lot of biotech and medtech companies where, particularly in the Middle East, I can see in Singapore, asking to give us investment because of the work we're doing. In my field where I specialize, I'm seeing a lot of fintech still. I know, again, London's been moving around, but we're still, in my opinion, the global capital for financial innovation. We're still looking at regulatory frameworks and compliance. So actually having digitalization, actually having innovation that can actually help with that, it's still coming out of the UK. It's still considered viable. So yeah, they're
Perfect.
probably the three things: sustainability,
Okay.
climate, health, and digitalization.
And it's really interesting. Out of one of these networking events that was done with HBBA, I met a lady who I think is on the call today, a lady called Sandra. And we are targeting Ghana for a healthcare university, but all the tech is coming out of the UK, and all of that tech has been developed by the National Health Service. So there's still so many kernels you can grab hold of and take to newer emerging markets. Karen, thank you for your time and insight. Are there any questions that we'd like to raise to Karen before we move on to the next guest? But we can certainly circle back round at the end. No, thank you very much indeed, Karen. Thank you. So, David Stringer Lamar, are you here and you're off mute, hopefully? Perfect.
I
So,
am. Yep, all good.
wonderful. I would call David a global commercial citizen. He's got his foot in numerous geographies around the world. He's the managing director of Fortis Consulting, which has been active in the UK since about 2010. He's chair of the board of Creative Education, which focuses on educational partnerships between the UK and China. So that's going to be an interesting conversation to pick up. He's a special international advisor at the Institute of Directors. He's a member of the leadership team for the International Trade Group. He's a board member of the chair of international trade for the Malaysian Society, the Chamber of Commerce for Thailand. So he's been where all of us are dreaming to export at the moment. But he's also the deputy master of the Worshipful Company of Glaziers and Painters of Glass. So I don't necessarily think we'll get time to get into that. That's probably far more interesting than all the hassle that's going on at the moment. But I don't think I'm going to be allowed to get away with it not asking you what the deputy master of worshipful company of glazers and painters of glass actually is. But hi, David. Thank you for joining. Um, I really want to start with the breadth of experience, not the depth, but the breadth of experience across international trade, education, business development between UK and global markets like China and the Southeast Asia. And what I'd like to talk about, what markets are you and the Institute of Directors looking at which are less volatile right now, more open to UK companies, as Karen's described. And the reason why I'm asking, I've just returned back from a successful trip with Indonesia, and one of our guests, Joe Hall, counseled me for a good long 10 days on why not to go, as it was so difficult and notorious to trade with. But given your global reach, where are you exploring with the IOD and your clients? What markets do you think are really interesting at the moment?
Thank you very much indeed, Nicholas. And it's great to be here today. I've certainly made a lot of notes already, and looking forward to the conversations. I've been interested by the remarks so far. Of course, I would say, there's still a great deal of trade going on with this place known as the USA. There's an enormous amount of business going on, obviously, with China, and a lot of business between the strange Brexit country known as the UK and the European Union. So there's still lots of corridors. I think I like your analogy. Probably some corridors have less speed bumps than other ones, but obviously they're all constantly changing around the place. Now, I'm based in the city of London, and I've just seen an announcement from the Lord Mayor, Alistair King, drawing my attention to the fact that the UK has just, or maybe about half an hour ago, 40 minutes ago, signed a free trade agreement with India. So I think that that's a great piece of news. And the headline was suggesting, it doesn't mean it's true, suggesting that one of the motivational factors was Donald Trump. So this moved along slightly quicker. So that is a good thing. So thank you, the President of the USA, for helping that move along, because it has been quite slow. Um, In terms of what we're all looking at the moment, yes, we trade in many different areas, and particularly in Asia, perhaps that we're looking at. But I think what's very, very interesting in your question is where are our clients and where are, if you want, the interview directors looking at. Last week, I was actually with the Lord Mayor of the City of London in Zurich. Now, what on earth were we doing in Zurich? So we're in Zurich actually looking at moving along the free trade agreement between the UK and Switzerland. And obviously, where I'm sitting in the City of London, I hear Karen's remarks, quite right about fintech. So looking at a great deal here, what we can actually put together. And there, the Swiss side at the conference we were at are very eager to engage with the UK, and Switzerland is very eager to engage. Sorry, and vice versa, UK Switzerland, Switzerland UK. So my point just being this is yes, well, I'll talk about Asia for sure, but there's lots of conversations going on in these corridors that you mentioned closer to home as
Do,
well.
do you
And I
think
think
do you
one of
think we've been lazy? Do you think we've sort of sat here on our laurels relying on the big monolith of market that is the US? All this hits the fan, and are we scrambling, or do you see it as strategy? Do you see it as coherent what we're doing? And I don't mean the UK, but as business, or are we scrambling?
I think there are you put in two things there, one politics, one business, then obviously lots of different parts of business. I'll use the diplomatic term, it depends. But what I will certainly say is I think the UK government, and that's a bit I'll talk about at the moment, but obviously the Swiss governments, the Indian government have all been looking at how to actually increase trade with each other. And obviously one of the most notorious things to negotiate is a free trade agreement. So that's been part of the strategy. If you want, the uncertain nature of the tariffs has pushed that along more. So I think all the countries have been looking around, and particularly the
Yeah.
UK, to try and find the post-Brexit bonus, wherever that might be. So I think it's part of a strategy, but at the moment, it's certainly giving it impetus to look at what's going on.
And how do we, as UK businesses, how do we better communicate, or and not even UK businesses, how as businesses, whether in the UK or in Canada or in Hungary, how do we communicate better our strength when we're entering into new regions? Now, the UK's got a beautiful history and a pedigree of entering new regions, officially or unofficially. So when you're traveling around the world, Zurich, wherever it is, how does the UK appeal still add up in different geographies?
Well, it's interesting. A good question there. Because last week I was chairing a an event actually with the British Malaysian Society, and looking at the UK appeal, if you want, to Malaysia, but the wide bit of ASEAN, and saying, is the UK special? How can it put forward that projection of what it actually its uniqueness, shall we say? So certainly the doors are very much open because people are looking to trade more. And I think you're coming back to your question: have we been lazy? Should we get out there more? So people have been working on the CPTPP, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, for a very long time now. And of course, the UK is part of that, which is very exciting. Malaysia is part of that. Canada is part of that. And obviously, if a Hungarian company works with a UK company, they can be part of it as well. Have we been lazy? The Lord Mayor last week and often talks about British companies should get up from their desk. Let me rephrase it. Should get up from their desk and get out there and start trading again and knocking on some doors they haven't been knocking on so far. And I will say, certainly since Brexit, what we've seen with our clients, and I think the government, is that people who would not have previously traded because they could send stuff to somewhere known as the European Union. I was there near it last week. Now find out they can send a sausage, a bottle of whiskey, or sell their services perhaps easier outside the EU bloc. So there has been more knocking on doors, but I still think we might have not been as proactive as we could be, and indeed we should be, and now we definitely need to be. Nicholas.
And go further afield with your experience, as you say, in Malaysia and elsewhere in Asia. What do you say are the different approaches between building a relationship in China versus Southeast Asia? I know that we were all members of the Eurozone and we had the subtlety of the Germans and the French and the Italians, but how does that compare with looking at China and the rest of Southeast Asia?
I think it boils down in general. I will answer that specific, but if we're going to be communicating our values to other companies, other people, we do need to be clear and articulate in them in terms of, and I often talk about, and people have probably heard me talking about it, who, what, and why. Who are we? What do we do? But importantly, why should an organization engage with us? So we've got to get those messages right. And then you're quite right. Then we'll look at it and say, we're now talking to China, we're talking to Malaysia, we're talking to Philippines. You've just come back from Indonesia. All these are different. They
Yeah.
are different, full stop. What do we do about it? We open a book, we go to an online lecture, we say they're different, how are they different, and how can I adapt to it? There's an enormous amount of information around cross-cultural business communication, which will talk to you about how Indonesians like to be presented information, how Malaysians like to negotiate, how the Vietnamese receive gifts, for example.
Yeah.
So certainly get on that plane, but obviously do a bit of research before you go so you don't annoy anybody, but really how can you optimize that engagement? So yes, there are differences. And what I'll say as well, I'm sure most people will get this bit. There are differences within China because it's very big. There are
Mm.
differences within ASEAN because it's very big. And there are differences within Europe because it's very small, but it's got lots of countries in it.
And I also think one of the interesting pieces that I think a lot of us in the small medium enterprise don't factor is as you move from one geography that you know to a new, your sales cycle and your close cycle could be completely different. So they think nothing of a 6 month cycle, and you'll think, I thought I would close this in 6 weeks. And because those things don't factor in, we get more stressful and we get more pressurized about trying to close the deal, which isn't logical to close yet. And that's one thing that I found as I've traveled around the world, trying to reassess the time to talk to the mothership. Yes, we've got a sales cycle of 6 weeks in the UK. Forget that. It's going to be 6 months at least before we start. So I think it's been useful. So thank you, David. Spectacular. But I can't let you go without understanding, just in one sentence, what is the worshipful company of glaziers and painters of glass?
In the strange place known as the City of London, we have 113 guilds or livery companies, some stretching back to around about 1100, the most recent about 3 months ago. The glaziers relates to stained glass and has been kicking around since around about 1350. And very pleased to say our company promote two of the world's top stained glass artists, winning them international business. Thank you for asking.
Well done, David. Thank you for your time and insight. Any questions for David? Or are you quite comfortable for me to move on? Next to the fireside, I'd like to introduce my third guest, Rob Spurgeon, dialing in from Vancouver. Hi, Rob. How are you?
Good. You hear me?
Yes, beautifully.
Okay, great.
Seasoned logistics entrepreneur. Not really quite sure exactly what that means, but you've got 20 years of experience as the
Yes.
manager of a Canadian alliance company, trading in the terminals, alliance terminals in Delta in British Columbia. And the reason I thought it would be useful to get Rob on is because he sees the movement of 8,000 international containers annually and 15 million pounds of freight monthly across North America. And he's collaborating daily with global supply chain partners. So I just thought he'd be an ideal on the ground to explain exactly what's happening between the borders of the US and Canada and the way customers are minimizing the impacts of tariffs. But there was one story I read today, which is Delta Airlines, not a small to medium enterprise, bought a new Airbus A350-900. And it was coming from Europe, Toulouse, where it was made, but they sent it to Tokyo first. because they found it if they operated it for literally no more than 60 days in Tokyo, the jet was no longer classified as new, and then they could ship it to the US and it actually sidesteps all the tariffs and fees. So I'm not saying there are loopholes or there's things that we could look for, but if you can do it with an A350 Airbus, I think you can do it with a simple container. So welcome, Rob.
Yeah.
Um, I know that a lot of your work is inbound to Canada, but what's going on with the trade tensions and the tariff frictions between the Canada and have you seen logistics strategies evolve even over the 100 days? And what shifts do companies need to make to stay competitive, even if you're just shipping in tea? How do you do it?
So first, let me speak as a Canadian because I think that's important. My company, we're a mid-sized player in Western Canada, and we're a 3PL. So our claim to fame is 8,000 containers, 27,000 pallets of product that we distribute around North America. But 60% of my customers are Canadian. And so they'd be wholesalers, distributors, and they'll be distributing to the Costcos of the world and the Ciscos of the world. If you're in the West, you would know who those folks are. Um, but my 60% of my customers that are Canadian are pissed. They're just pissed. So their strategies are they're retrenching from America and they're going, okay, do I go outside of Canada or do I start focusing in on Canada? Which is it's very interesting and it's visceral. And I would also say that in Canada, and maybe I'm wrong, but as kind of from my perspective, it's quite visceral. The sentiment of the Canadian citizen towards kind of the attitudes that have been put forward to us from Trump. I think from a opportunity perspective, I think Canadians, the Canadian government, particularly Carney, are really our doors are open. So if you were to, and this is just me rambling, if you were to look at where your competitor is an American, your number one competitor is American that's shipping into Canada, I think you would find there'd be a real appetite for products coming into Canada that are, liquor. Let's use liquor. Um, there's a market here.
And all the US liquor's been taken off the shelves, so there's plenty of space.
And not only is it taken off the shelves, if it is sitting on the shelves in the private liquor stores, it isn't getting picked up. So it's quite interesting if you see the little Canadian flag, and that's kind of that sentiment to Joe Public, which I consider myself one.
So when you look at the opportunity for people coming into Canada, what you're saying, you're pushing it at an open door and a big market to tackle maybe for the first time ever from Asia or from Europe. What do you think they should be doing?
I think they should be knocking on doors. They should be talking to our trade folks. You talked about the liquor control boards. Liquor in Canada is controlled by each province. So there's the liquor control board. Um, those doors, that phone call will be picked up in a heartbeat. And as much as it is a business relationship, I think it's an emotional relationship.
Yeah.
I don't know if this Canadian American, we'll call it alliance, but we're pretty connected. You know what I mean? Our whole business, we are an interconnected economy. I think it's actually really going to be interesting from my perspective of, you talk about oil deals in China, you talk about building oil channels to Europe. We're a resource company, or a resource country, I should say. Um, Once the American kind of Trumpism ends, I think Canada is going to be much better positioned because we're not going to be, so resilient on the American economy. We're going to
Yeah.
be we're going to be trading with Europe. We're going to be trading with Asia.
And when you look at your business, it's logistics. Logistics is now becoming a competitive edge.
Yes.
Because if you can find the right corridor at the right price for the right product, you're at the front of the stream. So, how do you think companies can turn their supply chain and their logistics operation into real strategic advantage, not just a cost center?
Well, that's interesting. That's an interesting question. Here's what we're seeing. I'm in Vancouver, so I'm an Asian import export destination. Um, Supply chains now, the port of LA, Long Beach, is the largest port in the world. Traffic is down 35% as of
Wow.
yesterday, the day before. So what's happening in my world, I'm getting phone calls every day. I got 100 containers that I want to bring to Canada and I want to park because I can't afford this 145 or 104%, whatever the tariff rate is now. It is astonishing how fast the supply chains are moving. And from a Vancouver perspective, my terminal is 1 kilometer from the port and 20 kilometers to the border. So I don't even have to sell this stuff. It's just I've got room and I won't have room for much longer. But the supply chains are starting to move to different ports of entry. And a
Wow.
lot of it's just parking parking the product until they feel the tariffs are going to come off. And they're going to have to come off because that economy is going to start cratering pretty quick.
Wow. Rob, thank you for your time and those real life experiences in the trenches. If there's any questions for Rob, please raise your hand now or we'll do it later. What I'd like to do is introduce you to my last guest to the fireside, a lady called Jo Hall. Um, she's an investor, an advisor, a non-executive director, former chief commercial officer of Toys R Us for Asia. I have to confess that Jo and I have actually known each other for decades. Um, and her first company was actually my first client when I ran an e-commerce design group called Reality. But Jo built the first toy company where you could actually buy online business, and it was a business called Toy Zone, and we've known each other for ages. Jo's an active independent investor and advisor, but one of the reasons why I asked her if she would join us here today, she's had 11 years as the chief commercial officer at Toys R Us, one of those dreadful places as a young parent you've ever been dragged around. You never want to go around it. It's a bit like IKEA. But she was responsible for commercial development and strategy across the company's 10 Asian markets. For those old enough, or for those who are in the UK, Jo was also on the board of Woolworths as the commercial director, and later moved to the Far East as the managing director of Woolworths Asia, sourcing all of their offshore-based stuff in Hong Kong. So she's perfect to join us in this fireside chat and chat through the China dimension. And I've got some fairly provocative questions, which I'm sure you won't mind answering. Um, Jo, I'm sure you'll agree that for decades, China wasn't just the factory of the world, it was the engine of cost efficiency and low cost and speed
Mhm.
in global retail. Do you think, and it's something I mentioned to David, do you think the West has been dangerously naive in thinking that this level of strategic independence could ever be easily unwound without a long-term consumer cost or innovation penalty?
Thanks, Nicholas. Thank you for inviting me, and hi, everyone. Look, I've been in Asia now over 18 years, so spent a lot of time in China. And I think, to answer your question, I'm not sure the West was naive, but they were certainly overly optimistic. The reality is that companies have been working for 3 decades plus to build and embed the infrastructure, the IP development, the talent, the manufacturing innovation at a pace that no other market could ever replicate. So to think that that could be unraveled, disentangled, so quickly, swiftly, cleanly, and cheaply is just a myth, basically. And the investment that has gone in to China through Western companies and governments it just doesn't reflect the geopolitical agenda of the urgency to unravel this dependency on China. But of course, that does come with economic penalties, higher costs, the speed to try and translate all that talent, all that experience into new markets such as Vietnam or Mexico. It cannot happen overnight. And it's not like flicking a switch to transition an operational service from one factory in one market to another. This is literally decades of experience.
Yeah.
And I think what perhaps people in the boardrooms don't recognize is that rewiring a supply chain is now a strategic overhaul with geopolitical consequences. And the independency of this whole ecosystem goes beyond the simple linear narrative of the supply chain. It's all the support network and why China works so effectively in a multidimensional way. And that's why they've always had competitive advantage.
But I think it's interesting when if you sort of say decoupling from China is a buzzword,
Yeah.
but for brands even like Apple, who have spent years embedding quality. So the chief executive was on CNN the other night just talking about we're not in China because of low costs. We're in China because of the depth of talent. He said,
Yes.
you know, we look for new target for programmers, and we go to a trade fair, and there's 1,000 guys and girls all being able to do the same thing. You come to the US and there's 15. So I
Yes.
don't think it's just supply chain, it's talent chain as well.
Oh, 100%. And, you know, the Chinese are very pragmatic in terms of educating talent, nurturing it, and they have massive scale because of the sheer size of the workforce. When you ask about decoupling, whilst the American politicians might like the political soundbite of, oh, we're decoupling, as though it's easily done, those on the ground know that the factory floor realities are so different from that. And what you're seeing is this dual coupling. You've heard of China plus one, where factories are being mirrored in other markets, be that Indonesia, be that Mexico, be that Vietnam, but they're not they're not exiting from China, they're hedging. They're basically switching a percentage of their production, be that 30% or 40%. Now, perhaps some of the planning, and let's just realize that China has been working on this since 2016. They got the heads up that Trump was going to give them tariffs. Now, these guys are not going to sit back. You mentioned being lazy or sitting back on the laurels. No way. And I would argue, Nicholas, that there's a counter argument that China has been decoupling from the US since 2016.
Wow.
And their trade exports now are only 500 billion US dollars. Their trade exports with the rest of G7 and emerging markets is 1.2 trillion. They have proactively decoupled themselves from this dependency of the US. And it was Trump that instigated that back in 2016.
Yeah.
So it's absolutely fascinating. And being here on the ground, having spent a lot of time in China, they're very smart. They have totally vertically integrated ecosystems, which again, the likes of Vietnam and Mexico just cannot replicate. So they are smart. They are ahead of where the US are. They really are. But maybe those in the West on this call don't necessarily hear what's going on the ground in China. Now, I'm not saying that the tariffs have not had major implications. They have. Rob was talking about movement of containers. I know for a fact that one very large fast food chain shifted 300 containers in less than 6 weeks before Trump imposed the tariffs to get the goods. And Rob will, confirm this, that in LA and the east and west ports of the US are stuffed up to the gunnels with inventory because everybody's shipped as much as they possibly can. It's in bonded warehouses. It's in every space, nook and cranny that they could take some inventory in before tariffs came into play.
And do you think that sort of dropping down a level away from the corporate market and the political market, do you think that tensions, even between the US and China, do you think they will spill into consumer consciousness? Do you see that there's
100%.
rising economic nationalism about
Absolutely.
shaping brand trust?
But China's been on this bandwagon for over 10 years. If you hear the local parlance in China, it's China for China. If you talk to the Gen Z in China, it's China for China. They're terribly, even more nationalistic and patriotic than their parents were because they were aspiring to speak English. They were aspiring for Western brands. I was in shopping malls in China post-COVID. All the Western brands came out. They've not been allowed back in. The shopping malls now they look Western and they look Japanese, but they are all Chinese brands, be that apparel, be that electricals. It's just, they have shifted massively, just as the US is, peddling this narrative of made in the US, made in the US. No way, because they won't afford firstly, the workers don't want to do the jobs. They won't pay the low pay wages. They haven't got the scale, and they're not going to start building whole brand new manufacturing factories, which take 3-5 years and build a whole infrastructure, which China has been doing for 30 years. What China is doing, which is very, very smart, is where they're building the China plus one in the other markets. They're supporting it with their packaging supply chain, their raw material supply chain, and they're building that entire ecosystem in that parallel market as well.
And on a more terrifying thought, what is going to happen to Christmas?
Oh, it's a disaster. I've just off a call. I've been in the toy industry for 30 years. Christmas could be cancelled for the US right now because this is absolutely peak production time. All the orders have been cancelled. Walmart, Target, everybody have cancelled orders. The freight forwarders are pushing out bookings on the hope that production will come through. August is peak shipping month for Christmas. And dear old Trump saying, every little girl can have 2 dolls instead of 30. I mean, I don't know what planet he's living on. You heard Mattel in their annual report reporting to the shareholders. They can't predict. They will predict increased prices, this whole uncertainty. But to put tariffs of 145% on toys, I mean, talk about killing an industry. In fact, I was on a call and they've just come back from LA, and so many small to medium-sized US toy distributors will go bust within 2 weeks because their cash flow has completely dried up. It is incredibly, incredibly serious. They are an absolute frenzy. Everybody's lobbying Trump and anybody else who will listen. And interestingly, the soundbite is that Trump listens to the last person he spoke to. And it seems Walmart and Target CEOs who did bend his ear have had some relaxation, as did the tech guys. So who knows? But the clock is ticking for the toy industry. It really is. And there will definitely be empty shelves and massive bankruptcies.
Joe, thank you very much indeed for your time. It's rare to hear those sorts of perspectives of the blend of commercial wisdom you've shared with us this afternoon. Thank you very much indeed. Thank you very much for being with us. So as we wrap up, that was the last guest. If you have any questions, please don't hesitate to raise your hand now. It brings us to the end of the fireside chats. Hopefully you found the hour provocative, insightful, you got some actionable ideas in there, do connect with the speakers directly via LinkedIn. That's the best way of getting hold of everybody, and they should have posted their details in the chat. George, I believe you've got a question. So if somebody could unmute George, please go ahead.
I think I'm unmuted.
No, you're not. You're okay.
Yeah, I think listening to all of our speakers, first of all, an hour and a half wasn't enough. We, I think there's some really good information here. I think the real key issue for me and my big takeaway is that the challenge we all have anywhere is filtering the data through reality. And so we're all subject to our own domestic media and information sources that in many cases aren't telling the reality of anything. Whether, I mean, Trump, call him what you want, but he signaled what he was going to do in The Art of the Deal when he wrote that damn book in the 80s. So this is just his strategy of negotiations. I think tariffs are a side issue for him. And I don't believe the underlying issue has anything to do with my take is, to everybody's point, he'll have to relax it. But I don't think tariffs is the real issue. And I think he is trying to reset the field with respect to international negotiations. And that is simply his style. Love him, hate him, that is his style. And he is disruptive as hell. But the world is adapting. And I think the most insightful thing I heard, well, from all speakers I did, but I think the most interesting part was the China plus one theory. I mean, for the U.S. to reindustrialize is the decade and massive trillions of dollars investment, particularly in Ohio Valley, where they'll need to reinvest. And so I think that we are going to see, but I think the wake-up call for Canada, and I speak from a Canadian perspective, is we got lazy. We did rely on the United States. It's south of the border. It's huge. We don't have to work that hard. We just drive a few minutes and we're in the U.S. And we didn't diversify. The world is diversifying now. And the fact that UK has finally got a trade agreement with India, those are the biggest, highest walls on the planet. And I think that we're going to start to see a readjustment of our entire ecosystem. Yes, there's going to be chaos. Yes, there's going to be bankruptcy. But I think at the end of the day, we are going to be better off. But I think the key element for this conversation here is we're getting perspective of real people on the ground, not filtered. That is invaluable. That's why I really support these calls every month. And I wish it was 10 times more people on, because I got 20 people who should have heard this conversation. And so big support. Thanks for putting it on, everybody. Thanks, Susanna and Nicholas, for taking the lead. And all of the guest speakers. I'm a good friend, Rob Spurgeon, and I go way back. And I actually live not far from his plant. I'm going to go down there and take a look at all those containers stacked up in his yard. So back to you, Nicholas.
Thank you. So thank you, everybody, not only for your attention, but engagement in shaping what comes next. Look out for the final session in the series, which will be the first Tuesday of June, the 3rd of June, at about the same time, 1500 GMT. I'm Nicholas Jeffrey, hopefully bringing you clarity, insight, and some commercial power to every conversation. Susanna, thank you very much, and thank you, back to you.
Thank you so much, Nicholas. And absolutely, I'm very appreciated. Dear Joe, Rob, Karen, David, your presentations were amazing. Thank you. And also, it was a remarkable moment at 3 o'clock when Sir Keir Starmer signed a contract about the free trade with India. So it was a very good timing. The UK government knows what to do. So they follow us. How remarkable and how strategic, how amazing we are. Anyway, please follow us on LinkedIn. Come to me, come to us if you need any information. You are more than welcome in our monthly in-person events in London. And let me tell you, at the moment, it is not a public yet, but Nicholas and I will be representing at the Queen Elizabeth Conference Hall on the 29th of May, HBBA Global, HBBA Canada, HBBA Hungary in London, at the Global Britain Expo. So we'll share you the information. Please come, visit us, support us, and break the boundaries together. Thank you very much. Thank you.
Thank you, everybody. Bye-bye.
Thank you.
Thank you for your help. Thanks
Bye.
for joining. Bye-bye.
Thank you.
Thank you.